go across to our next guest. Saurabh Gupta is now with us. CFO at Dixon Technologies is with us. So experts believe that China lockdown can lead to a lot of other further supply disruptions, especially coming in from the electronic side, mobile phones, because of critical components. They may not be very valuable, but they're critical components. How would you look at the news flow coming in from China now?
Yeah, you're absolutely right. I think so. Shenzhen is a major hub for electronic imports. And clearly, if this continues, if the shutdown continues for more than 3 weeks, I think so it will have an impact on the supply chains. It will have an impact on the vessel availability and also the freight rates going up. The freight rates have recently corrected and came down by almost 40% from the peak levels. I think so it has a potential of again going back. But my sense is it should de-escalate within week 7 days, what I've been reading. And clearly, we have a production cover till April. We have inventories with us. But if it continues, if the shutdown continues beyond 3-4 weeks, and then I think so we will have some difficult times in the Q1.
Okay, Saurabh, so you're hopeful that perhaps the situation will de-escalate in a week's time as far as the lockdowns in China is concerned. But the other way to really read all this geopolitical situation is the increased opportunity for exports. What's the export potential that you see? And experts do believe that, your exports can ramp up to 30-35% of revenue contribution. Is that right?
Yes, yeah. We personally feel and we are confident in certain categories we will have a global export competitiveness, and we will have an export play. Those categories will be LED lighting, where we think we'll start exporting in the next couple of quarters. Mobiles, we are already exporting to North America markets to our anchor customer. And the third category, which I feel confident about, is washing machines, which we'll also start exporting in another 12 to 15 months down the line. So in these three categories, we'll have a big export play. And we feel confident that in a couple of years down the line, at least 35 to 40% of our revenues should come from the export markets.
Okay, Saurabh, so that was about exports, but let me come back to the main business. Now, cost as a percentage of revenue had gone up in Q3. As you had indicated that you weren't able to pass on all the price pressure. Have you been able to do that in Q4? And consequently, should we expect margins to bounce back to 4% plus levels in Q4?
My sense is going back to 4% plus levels would take another couple of quarters for us because the commodity prices have been going up. I hope with this China situation now the commodity prices will soften further and will come down, which will help us in passing on those input prices better to the customers. So what we are seeing is that every quarter our passing on to the customers is happening at a faster pace. And Q4, you should see better margins as compared to Q3. But in the ODM business, which is 20% of our revenues, but I see those margins going back to the normalized levels maybe in another couple of quarters. So it will take some. So by Q2, I expect the margins to go back to those normalized quarters. Till then, I think so. Every quarter it should get better. But yeah, it will take time to go back to the normalized levels.
On the back of new segments and PLI schemes, you had guided for revenues of around 17,000 in FY23. Is it still on track?
That's right. So we stick to our guidance. So what we have been guiding for 17,500 crores for next financial year, that looks good on track. And a significant portion of those revenues will come from mobile and LED TV as a category. If I have to just bifurcate into the PLI revenues, my sense is almost out of the 17,500 crores, almost 8,500 to 9,000 would come from the PLI category revenues.
Thanks so much, sir, for taking out time for us, telling us what to make, especially on the electronic sides of the current situation.